So I think we're, all of us are pretty familiar with the regular programs, the FHA, conventional VA. So I wanted to show you guys a little bit different. I don't know if you guys, might know of these programs, or this is some of the programs that people have been asking us a lot about. So I kind of wanted to give you guys some information and hopefully it'll help you guys. One of the big ones is the 100% financing. I think everybody has inquired about that. We have come a lot of cases where the borrowers, might have enough just for the down payment or closing costs, but they don't have enough for both. So the 100% financing, I think, is a great program. If they don't have to be first-time home buyers, and they can go down to a minimum credit score of 600. And for this program, you can also use non-occupant co-borrowers to qualify. The first one is an FHA loan, a 96.5, and then that loan is fixed for 30 years. The second one, it's a 10-year loan. And the starting interest rate on that one is 2% above the rate of the first. Okay. So if your starting rate on the first is at 7.25, for the second it'll be at 9.25.
Is that fully amortized for 10 years?
Yes.
Well, so it'll be paid off in 10 years?
Yes, it'll be paid off in 10 years. And I mean, just, it's only 3.5%, so the payment is only a couple $100, which to me it makes sense,
Yeah.
Sometimes we just spend a couple $100 on nothing, so why not have it go towards, the down payment of the house and you're paying equity. So that's always a plus. For the properties, it's they do single family residence, PUDs, condos, manufactured homes, and they only go up to 2 units on those for the 100% financing.
Is there like a loan amount and all that stuff? Like a
just county loan limits?
the county loan limits?
Yeah.
Okay.
And there's no income limits on it either.
Yeah, and there's no income limits on it. Thank you, Chris. So that's a plus. And then I know with this particular program, they do allow 600 minimum FICO score, whether they're W-2 or self-employed, because I know sometimes if they're self-employed, they require a higher FICO score. But this particular one, it's 600 for either or.
Yeah, that's low.
Yeah.
That's what West Jen said?
I think my
I'm
dog
sorry.
has a
West
better
Jen
FICO
said
score.
Yes,
That's
I did confirm. So yeah, that's a plus.
Yeah.
For the DTI, they can go up to 55% along the to income ratio. So that's always, a plus as well. That always does help, and with FHA loan, and that level of FICO score, we do have a little bit more wiggle room, more room to play with, and be able to, get the loan approved. So that's helpful, I believe. The ITIN program, I know a lot of people have been inquiring about that one, and I think the biggest thing with that one is the down payment. Most of the lenders require anywhere from 15 to 20%. We found a lender. We do have a lender that can do with a 3.5% down payment. It's 3.5% down payment for W-2 borrowers. It's a 600 FICO score that they need, and for self-employed, it's a 660. With the ITIN program, this particular lender, they're very flexible. We don't have to source any large deposits, which is a big plus. Like, if, and a lot of people, they do have like mattress money, so then they want to try to make one large deposit, and we're like, no way, you can't do that. With this lender, we can show like an online printout, show the deposit that the funds are in there, and they're okay with it. They're not going to ask us to source the deposit. So that's the big plus, that helps, I think, a lot of when it comes to that. They do have, for the ITINs, they do have it where, if the borrower doesn't have a credit score and they're W-2 employees, they can go ahead and do it, but they do require a 25% down payment, which is
I have a quick question on
Yes.
that. So I've come across clients who have a credit established with their fake social, and then they file with their ITIN.
Yes,
So if their credit is with their fake social, would they use that?
yes,
They will.
yes.
Perfect.
So,
Yeah, well, most of them do.
yeah, with the ITIN.
Most of them, their credit is with their fake social,
Yeah.
but they use the ITIN just to file taxes.
You know what?
Because some lenders do, some don't.
Yeah, no, I'm sorry, let me go back. You're right. When we're doing like an ITIN loan, the credit has to be established with the ITIN number.
With the ITIN number.
With the ITIN number. So, and I'm actually working on one right now where it's a very clean file, but he has very little credit because he pays cash for everything, So he got his ITIN like 20 years ago. He can't find the original letter, and his last account that he opened was back in 2014. He got his renewal letter in 2018. So they're like, we need something to show that, he had the ITIN number at the time that he established the credit. So they will, that's one of the big things that they will double check or check on it.
Do you know if they, this is just what I've heard, so I wanna make sure if this is one of them or not.
Mhm.
Do they count how many trades they have?
Minimum 3 trade lines they require, however, they will use non-traditional trade lines as well.
Oh, that's perfect.
Yeah.
Like the utilities,
Utility bill,
cell
cell
phones or
phone
whatever.
bill, yeah, and they'll either take like 12-month payment history of bank statements, cancel checks, or we can do a credit supplement.
That's for the I-10 one?
Yes. Yeah, that is for the ITIN one.
Go back to the part that you said, if they don't have this, they will need 25% down payment. What was it again?
If they don't have any credit scores.
Oh,
If they're W-2 wage earners and they have no credit scores,
so you
they
mean by
require
no credit
25% down payment. Yeah. And then also too, one thing that I like about it that they're flexible with is if the borrowers go from W-2 to, from W-2 earners to self-employed, as long as we can show 6 months of deposits that they've been self-employed, they're okay with proceeding with the loan.
Is that for ITIN or
For
just
the ITIN.
for the ITIN?
For the ITIN, yeah.
Okay,
So, I mean, they do have some flexibility, but, some of the stuff that's non-traditional, so not everything that would apply to a regular loan applies to this particular loan.
And I have a question for you. I know I walked in a little late. So on the ITIN program, so depending on the scenario, it's gonna depend on the LTV, right?
Well, we can go up, we can do a minimum of 3.5% down payment on it.
With all these scenarios that you listed here?
Yeah, as
Okay.
long as, if they're W-2 borrowers, as long as they have a minimum of 600 FICO score, you're okay with it. The DTI, we cannot exceed, I believe it's 55% on the back end, that is
Okay.
information on the back end. So, I mean, but other than that, it's pretty much, they're very flexible with some of the stuff. Like, I don't know if you were here when I said that they don't require us to source any of the fixed deposits.
Yeah, like I just haven't seen ITIN programs at 3.5%
Yeah.
down. That's huge.
Yeah, so I mean, and the thing with this program, I did double check with the rep, and they do take anywhere from 45 to 60 days to close. So it is, a little bit lengthier than your regular purchase transaction. So I think that's one thing that, we do want to let the agents know at the time that we quote.
what do the rates look like for this program?
So based on today's rate, they start at 9.375.
What is it?
9.3.
Oh,
That's a credit.
But we can buy it down.
wait, is that a 30-year fix?
It is 30-year fix. Yeah, it's anywhere from a 600 FICO score to a 639, it starts at 9.375. If they have above 680, it's at 8.875. So it's still quite different.
It's just one of those things
Yeah.
that if it allows you to come in with a low down payment, then
Yeah,
then at least
yeah.
that's better than not
Yeah,
having
you
to pass
can't
it
get it
all.
all.
Yeah, no,
Right.
definitely. So I mean, it helps, because a lot of people, 10-15% can be, a lot of fines and stuff like that. So yeah, I think it does help. Let me see what other. One, I think one of the biggest thing too with ITIN is that, I think regardless of, the lenders that I've worked with or we use, they always ask for a verification of rent. So we do need to show a verification of rent, whether it's from a management company or, a third party. If it's from a third party, we will also need to show cancel checks or withdrawals from the bank.
Is that for ITIN or for?
For ITIN, yes,
Okay.
yeah.
And it's like 12 months?
12 months, yeah, that's, the VOR is the must, that's required, there's no, I haven't tried, but there's no going around.
They want to make sure that
Yeah.
you're stable.
Yeah, so that's a
For
must.
4 months.
Yes.
I'm sorry, Sandra, I missed it. In what form? Verification?
The verification of rent,
Right, but what form is acceptable?
Cancel check?
cancel checks or from a management company.
Okay, so they can write a letter saying
Yeah, so, yeah, we can have, like, if it's a private party, we can, have them fill it out, and then we'll need to show the bank statement for the withdrawals, for the payment amount,
Okay.
or cancel checks, whatever the borrower may have. Yeah. Do you guys have any questions on this one?
I guess we just have to submit it and find out, right?
Yeah.
That's the best
You know
way.
what? Okay, so sorry, one thing, with this particular lender, with the 3.5% down payment, we can actually submit it for a pre-approval. We would just need the info documents, so we could go ahead and get a pre-approval for you guys up front, so you guys are aware, how much they can qualify.
And what it's gonna look like.
Yeah.
And what's the turnaround on the pre-approval?
From what I've seen, they're about 2 to 3 days.
Okay, not too bad.
Yeah,
And this one, you said it takes up to 60 days.
it can take up to 60 days for the
The
transaction to
item?
close. Yes,
60 days, huh?
yes. Anywhere from 45 to 60, just,
Just to make sure.
Yeah,
That's good to know.
yeah, no, definitely. Yeah, because I know some people are like, what's going on?
Yeah.
So that's just, I'm like, well, that's good to know, because I know some people can get a little bit antsy. Okay, the next program is the manufactured homes in mobile home parks. I think we've had a lot of agents ask us about this one here. There is a limited amount of lenders that will do these loans. We actually, or Chris actually found us a lender that, they work very well. They seem to be a little more flexible than other lenders. There's no minimum credit score that is required for them to qualify. I think it all depends on the credit score and the year the house was built.
Oh, yeah.
So those two will be, what they can determine up to how much they can qualify for.
And I'm sorry, is a limit that years, like, because I know there's some programs that if it's more or,
Older than a certain year.
yes, yes.
You know what, honestly,
1977.
I want to say
Yeah.
1976.
70, I heard 79 or 70, something like that.
When I've spoken with them, they do work with different investors, or, they have different investors that they work with different guidelines. So I think it's just how that scenario looks overall. So if they have their Bibles, then maybe they'll make an exception depending on the down payment too. So I think it just depends with them on the overall scenario.
Okay.
So because anytime that I've asked questions, they're like, well, just send it in. We have different investors that we work with. So if one can't do it, then we can definitely try with the other one. So, I feel like there's a lot of wiggle room or flexibility to be able to see if they can qualify for a house.
And it's depend on how, what means is that the property, how is, or,
I mean, they will require an appraisal and
Okay.
just, like a regular appraisal, if there's anything that's a health or safety issue that will require to be fixed.
okay.
So we can have clients purchasing in LA County, or are the requirements different for LA County?
So the requirements are the same. The only exception that they will make where they will, for mainly I think for self-employed people, is for anybody that's purchasing in Riverside or Orange County, they will use 12 months license to qualify.
So what would it be in LA County?
W-2s, if they're wage earners, tax returns for self-employed.
So they would have to have W-2s?
Yes, W-2s are tax returns if they're self-employed.
Got it. Okay.
Yeah. With them, their loans are only 25 years. And again, the rate it can vary anywhere from 8 to 12%. And it's mainly overall on how the loan scenario looks. That's what they base it on. So, but they pretty much, because we've been asking like, what are the rates? And they said anywhere from 8 to 12. Obviously, the better.
8 to 12%.
Yes, 8 to 12%.
And there's no mortgage insurance with a 5% down.
Yes.
Do you know if it has to be a double wide or more?
I have seen where they do them for single wide.
Okay.
It's just depending on on the age of the property. With this lender, we can get you guys a pre-approval directly from them. Once we submit the packet, it takes about 2 to 3 days. And they'll let you know how much they can qualify up to and what the rate will be and stuff like that.
But they need to have a property already that they want to
They
buy.
don't.
They don't have to. So
They
if,
don't have to.
if I have a buyer, I can just,
Yeah.
we can just submit it
Yes.
and then they'll say, okay, based on this, they qualify for this
Yeah.
amount.
We just let them know like if they're looking in certain cities, what city, or if they have like a certain community that they want to look into, we can let them know that so they can get an estimate of how much the rent space will be.
So
So,
they have to qualify for both,
yes, for
for the loan of
yeah.
the property and
just
the
this
space. Okay.
Yeah, so they do have to qualify for loan, that's why they want us to kind of zoom in and go where, because I mean, I think they can vary, I've seen it go up to as high as 1,900 for the space rent.
Yeah.
So that's why they want to get.
For
it.
26 in the county.
Yeah. Yeah,
And question on that one, for mobile home parks, do they have any requirements for the parks themselves?
you know what, every park is a little bit different because the borrower does have to get approved with the park. Some of them, I know we were going over a one scenario with Chris, and a park in San Dimas requires the borrower have a minimum of 700 credit score.
Okay,
So it just depends on the park. It's
And they also have income requirements, like you
Right.
have to earn two times or three times the rent space. So
Yeah.
each one will vary, but
Yeah,
some
they
can
have
be very hefty.
applications,
Yeah.
yeah, they have applications you have to fill out.
Yeah, no, definitely. And I mean, just kind of looking overall, if we see that with the mortgage payment and the space rent, it's really high, then we'll see, that they will consider a house, maybe not in the same area, but in a different area. Yeah, and I am actually working with one of the loan officers because the payment was gonna be over 4,300 for the mobile home.
Oh my
Wow.
God.
Must be a nice one.
Yeah, so I was like, wait a minute, we can get
That's
them
a
a house.
mortgage for us.
Exactly,
yeah.
no, that's-
Well, but that's
not
wonderful.
closer, depending on
Yeah,
the city.
so, we kind of, ran different loan scenarios and stuff like that. So they, were like, hey, see if they're open to it in a house,
What a
so.
condo,
Yeah.
Nice
Yeah,
condo.
exactly.
Yeah, no, definitely. So, I mean, it's not in the same city, but it's a house, I feel like it can't be that, I'd rather have a house over a mobile
Yeah.
home. So, yeah, so, I mean, if there's room that we can make something or, we would get them into a house rather than a manufactured home, we try to go that way.
What in mobile home and the land, is the same
They do.
process?
Yes, if it's a manufactured home, if it's like a double wide manufactured home and they own their own land, we can do like a conventional loan or an FHA loan.
Yeah, but if it's not in permanent condition, it's the same.
That's a mobile home.
Yeah, that would be a mobile home.
Oh, yeah.
Yeah, I mean,
Yeah.
like this particular lender can do it, and obviously the rate would be anywhere from 8 to 12 rather than just a regular conventional or FHA. The last program is, it's called DSCR, which is Debt Service Coverage Ratio. This program is for investors, people that are interested in buying investment properties, but they might not qualify with the regular income, whether there's W-2 returners or self-employed. We don't have to show any income, so there's a lot of flexibility. It's a great program for investors that do have several properties that don't want to show as much paperwork because they feel like it's too much, we don't require any income documentation, so that takes a lot of work out of doing it. It's for investment properties, we don't need any income documents. The minimum credit score that they do is 620, and it does require a minimum 20% down payment.
What's the reserves on that?
It depends on the loan scenario. It can be anywhere from 3 to 12 months on the subject property, and then 2 months for any other properties that they might own.
Okay,
Yeah,
so if you have 10 properties, then you have to show 2 months reserves for each property,
possibly, yes.
possibly,
Yeah,
depending on how strong you are.
yes, yeah, no, definitely.
And what is the interest rate in this program?
On this one right here, I actually put it down and see. I believe it was based on today's rate, it was at 7.625, the average rate for this particular.
So it's based on that, the interest rate is in that.
Yeah, I mean, that's just based on where the starting rate could be at. Obviously, the rates do fluctuate depending on the loan scenario. They're never the same. So, I can't give you the same rate that I might give volume.
Yeah.
So this just depends on the overall loan scenario.
Okay.
The loan amount that they can go up to, they could start anywhere from $50,000 up to $3 million for the loan amount.
For the mobile homes?
No, this is for the DSCR, the
Oh,
last one.
the last one.
Right,
Wow.
investment.
Because it is an investment, for investment properties, it does have a prepayment penalty. It has up to 3 years.
I heard that before.
Yeah.
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 So for that, is there a way you can buy it with your S-corp or whatever, like your business?
You can put, the title under your LLC.
Just title, or you have to qualify as an individual?
Yeah.
Oh,
Yeah, the title can be under an LLC. They will ask you for, documentation like the articles of incorporation, I believe, and some other stuff. They added a few more other stuff because before with the articles of incorporation, and the same information that was not enough,
Right,
but I
makes
know
sense.
that they added a couple more items, to make sure the ownership.
Let me ask you a question.
Yes.
The rate?
Do they
It's
take into
great.
consideration as far as down payment or rate if the future rent does not cover the full payment, the full PITI?
You know what, there's different programs for that. We actually, I just closed one last month where it didn't matter if the rents didn't cover the.
Is that this particular?
Yes,
Oh, perfect. Yeah, because I think that's the one thing that I've come across that's been a little bit of a challenge, that the rents are not supporting
yeah,
the PITI, and therefore either they need a higher down payment or the rate is too high.
yeah. Yeah, you know what I did, because I know I was kind of going over it, and I think with this one, some of the lenders have become a little bit more flexible with it, because I did run into a program earlier this year or a loan where the rents were supporting the payment, and I believe they wanted us to change programs to go higher on the interest rate to be able to kind of compensate.
sounds like trouble.
But this particular lender, it didn't matter.
Oh, good.
It did, because I mean, again, it just depends on the overall loan scenario. It was 25% down for this particular, loan scenario. But the rents came back lower. They were expecting like around $4,000, and then it got back like $3,000.
Oh, wow.
So, but it didn't matter. They did ask for 6 months reserve, so borrower had it, so that was okay.
That was enough.
That was enough.
Oh,
So we didn't
perfect.
have
That's
to
good
worry
to know.
about it. Yeah.
Yeah, okay.
So I mean, that's, the good thing about it and stuff like that. We did have one, it was actually for one of our agents. She was thinking of doing a hard money loan. And, we're like, well, why, and again, she, multiple homes, they were worried about the paperwork, and we're like, no, it's minimum paperwork, and we were actually able to get her, I think it was like an 8.625 30-year fix with no prepayment penalty.
Wow.
So that was, for not showing any income, I thought that was pretty good, and I'm pretty sure she saved a lot of money from her money to just a regular conventional loan. So it was the savings for her all the way around.
You don't have to go through all that paperwork.
Yeah.
So, yeah, it's pretty good.
Yeah, no, definitely. Yeah, so I mean, I think we have, a pretty good team of loan officers, we've been doing this for quite some time, so, and we always kind of, I feel like we always feed off of each other, we bounce ideas back and forth. If I have a question, we always ask one another. So I'm pretty sure if I don't know, Sylvia might know, or Chris might know, any questions that you guys might have. And we can always just run any loan scenarios that you guys might have, or if any questions, we can find out for you if you don't know, or we're not certain of it.
Are you able to send me a PDF on this so I can print some and then
Yes,
pass
of
out to clients and stuff, or probably include it in the emails, send it to clients?
Yeah, no, definitely. I mean, like I said, other than the regular diabetes conventional, we also do like the 12 months big stimulus program for people that are self-employed. They base the income off of the deposits for 12 months and average it out and go through 7 months to qualify. They do have the profit loss limit for self-employed people. I believe they can go up to 90% once you go into that type of program.
Oh, that's not bad.
It's a non-QM program, so the rates are a little bit higher than your typical APJ conventional loans, but there's different programs out there that we can, for the most part, get people qualified for. Yes, have any questions?
No.
It was really good. Good job, Sandra. Thank you. That was good. Are you gonna dance for us now?
You might as well.
I'm gonna get a
Yeah. Your turn.
I was hoping you could give us a preview.
Oh, that's what I did in class. Okay, never mind. Hold on.